We begin with the cheering news that airlines are planning to reduce fares in response to the removal of 7.5% value-added tax VAT. The suspension of the VAT from airfares took effect from January 1st, 2021 as part of incentives contained in the Finance Act 2020. Airline operators say they have received the directive on VAT removal from the government, but are waiting for the Federal Inland Revenue Service to implement the directive before the low fares regime comes into operation. Some airline operators are of the view that substantial reduction in airfares might not be realizable, as airlines were still grappling with increasing exchange rate as the airport authority moves to increase passenger service charge. Now, as part of its promise to connect the whole country by rail, federal government has signed a memorandum of understanding with a Portuguese-based company for the construction of $1.9 billion Kano-Maradi standard gauge rail lines. Signing on behalf of the federal government, Minister of Transportation Chubike Rotimi Amechi says government is committed towards revolutionizing the transportation system in Nigeria. Managing Director of the contracting firm, Antonio Graca, disclosed that the project, besides developing freight and passenger transport, will be integrated with road transportation, which will make a great contribution to the local economy.
We intend to move into the site so soon as possible, so soon as we can have access to the site, and to start preparing all the activities we have to do according with our engineering design.
Kano-Maradi Rail project is not a standalone project. It is part of the greater Lagos Kano-Maradi project, and it is also part of the greater West African community agreements towards expanding trade and transport.
Well, it's a decision, a strategic decision of the Nigerian government, and they choose, we didn't send them, they choose a Portuguese company who's very experienced in Africa and very good at that. They just won another contract in a very close country, and another bid in another close country.
The Kano-Maradi Railway will run through 3 states of Kano, Jigawa, Katsina, and Niger Republic as far as Maradi. Besides providing transportation, the project will provide additional socio-economic benefit to both countries. It is expected to be completed in May 2023. Now, the federal government is optimistic that the 2021 budget will perform optimally with strategies put in place. Minister of Finance, Budget and National Planning Zainab Ahmed, who gave the assurance while presenting a breakdown of the federal government's budget, also advised Nigerians to familiarize themselves with the Citizens Guide available on the website of the Budget Office of the Federation. Lekatun Babatunde joined the webinar and now reports.
2020 was a very challenging year for the entire human race. It started well and ended a complete departure from all expectations. In Nigeria, the budget had to be reviewed downwards, but impressively, Nigeria attained 73% revenue success rate based on figures already collated against all odds. The IMF projects that global economy will recover gradually to 5.2% despite a slowdown in 2020. Sub-Saharan Africa will see an improvement of 3% against a contraction of 3.1%. Nigeria is projected by the IMF to record a GDP growth rate of 1.7%, though the National Bureau of Statistics puts the figure at 3%. The Minister of Finance, Budget and National Planning, Zainab Ahmed, this Tuesday gave a virtual breakdown of the spending plan for 2021 and where the funds would come from. She explains the Finance Act will ease economic strains on individuals and companies, adding that government remains open to receiving ingenious advices.
The Finance Act 2020 has adopted a counter-cyclical policy direction to respond to this economic downturn. We have introduced some fiscal relief measures to provide relief to taxpayers. We've also introduced reforms of fiscal incentive policies to prioritize job creation and create recovery and growth and foster closer coordination between monetary, trade, and fiscal authorities.
The budget is predicated on the $40 per barrel oil benchmark, 11.95% inflation rate, and an exchange rate of 379 naira to the dollar. Defense and security, infrastructure, as well as youth, women, and social development are top on the critical sectors allocation table for the year. The minister assures there are initiatives to enhance revenue collection and control expenditure. The initiatives will also improve the business environment, support the economic sustainability plan, and improve the social well-being of Nigerians.
The Minister of Finance, Budget and National Planning, Zainab Ahmed, on Tuesday disclosed that out of 8.26 trillion naira spent on capital projects, debt servicing and payment of salaries and pensions in 2020, 118.37 billion naira went into COVID-related capital spending. Speaking on the approved 2021 budget, the minister said 1.8 trillion naira was expended on capital projects, 3.27 trillion naira on debt servicing, and 3.19 trillion naira for payment of salaries and pensions. In the capital expenditure, Ahmed noted that the figure represents about 89% of the provision made for capital projects. While joining me to look at the spending plan is Uche Owaleke, a financial economist and professor of capital market at the Nasarawa State University. You're welcome.
Thanks very much, Musa.
Okay, looking at the size of the budget, 13.5 trillion naira. Yeah. How feasible is it?
Well, I think it is. If you look at the outturn of the 2020 budget, for example, you recall that the government, had about aggregate expenditure was about 10 trillion, and if you look at the revenue projections for 2020, the oil projections, didn't really disappoint. Oil price was based on $28 per barrel for 2020 budget, but the outturn was on the average $43 per barrel. For quantity, we had 1.8, okay, but we were able to get 1.79, okay. And if you look at even the performance, but for the lockdown that we had in 2020, I'm pretty sure maybe the performance in terms of the capital component, would have been better. Just as you have read, about 89% is quite unprecedented with respect to capital spending. So talking about 2021, I think it is realistic. I think the $40 per barrel is quite realistic given where oil price is, and also given the projections, from reputable organizations. Goldman Sachs, for example, is projecting $65 per barrel on the average. Okay, energy agencies such as the Energy Information Administration is also projecting something in excess of $50 per barrel. And if we have $40 per barrel, I am pretty sure that on the average in 2021 we will have something in excess of that. On production side too, our capacity is 2.5. We have 1.4 now. If we add the 300,000 condensate, that's about 1.7. So I'm also sure that even with the OPEC arrangements, we should be able to do 1.86 or something close to it in the 2020-21 budget. So I think it's largely realistic, except for the assumption of, I've always said it, the exchange rate. In 2020, the exchange rate was 360, but the actual was 379. And the government has also used 379 for 2021 and the next 2 years, talking about the medium-term expenditure framework. So 379 may not really crystallize in view of the fact that central bank has a plan to unify exchange rates. Okay, but be that as it may, I think largely the plan we have for 2021, is realistic. again, except for the growth projection. Okay. I also think it's a little ambitious at 3%. The World Bank is projecting 1.1, for example. Fitch is projecting 1.3%. Okay, even the central bank is projecting 2% for 2021. So I think 3% will rather be on the high side. Yes, but by and large, in terms of revenue and expenditure outcomes, we may not have significant divergence, from what we have on paper. Okay, on the condition that we don't, react to the, COVID crisis the way we did in 2020.
Okay, let's look at debt servicing at 3.32 trillion naira. What does it mean for an economy that is actually recovering?
Well, that's, for me, it's something, you can't help. Because you have borrowed, you have to service your debt. And government has a reputation and wants to maintain the reputation of not defaulting in its debt obligations. And that was why in 2020, you saw the figure too. In 2020, you just read it out here, over 6 trillion went into debt servicing and personnel. Okay. In fact, debt servicing was 3 trillion or 3.1 trillion in 2020. So in 2021, the government has now provided for 3.3. Okay. Yes, it's on the high side, but as I said earlier on, government, cannot afford to default on this, debt service obligations. The borrowing we are going to do in 2021 is huge, 5.6 trillion, to finance the deficit. But again, you may want to justify that by the fact that in a recession, in order to pull the economy out of recession, you really need to spend. Okay, and that's why one may need to justify the borrowing. And if you look at the revenue we're expecting, 7.9 trillion. That's what the federal government intends to, as federal government, return revenue. Okay, and you look at it in the context of the size of the budget, 13.5 trillion. You have to borrow to be able to finance the deficit. So borrowing, in my view,
now talking about the deficits, yes. There's a 5.6 trillion
deficit,
naira.
Yes.
What's your position on that?
Yes, that's the point I made, that the deficit is necessitated. One can justify it, against the backdrop of the desire of the government to pull the economy, out of recession. And the way to do that is to really spend. And that's why I'm happy that the capital component this time, is a little significant, 4.3 trillion. That's what we have with respect to capital. And the bulk of it, okay, over 800 billion is going to works and housing. We have another substantial part that is going to be accounted for by the Federal Ministry of Finance. Okay, and then you have education. For the first time, education health, are having, something I regard as substantial, relatively substantial compared to previous years in terms of, capital allocation. And then you have transport, you have agriculture. All these ones I've mentioned have been allocated over 200, billion naira in 2021, budget. So I think the deficit, as I said, is being justified by the fact that we need to spend. And the good thing is that, much of it is going into capital components.
Okay, now that the Finance Act has start operation, have kicked off.
Yes.
How can government raise required revenue, considering that there are tax exemptions in the Finance Act?
Yes, if you look at it, the minister talked about strategic revenue growth, initiative, which is going to be introduced in 2021. Okay, it's not only meant to ramp up revenue, but it's also meant to control spending. Okay, if you notice, in 2020, the major challenge we had wasn't really from oil revenue, it was from the non-oil revenue. Okay, and in 2021, even the projections that we have in 2021 have more weight on non-oil revenue, because oil revenue is just about 2 trillion out of the 7.9 trillion. So the bulk of it is going to come from non-oil revenue, which is why the minister was talking about, a strategy, to ensure that revenue is not only ramped up, but also costs are reduced. One of the things that you have in the Finance Act, which ensures that cost is reduced, is pegging the cost to revenue ratio. For the government enterprises, the 60 of them, 60 government enterprises, pegging their cost to revenue ratio to add a maximum of 50%. In other words, when you generate, whatever you spend to generate money must not be more than 50%. So the remaining one is expected to be paid over to the to the federal government. So that's a very good one. Again, government intends to save some money from the oil subsidy removal. Government also intends to save some money by the implementation of TSA. Okay, in addition to the what they have put in place, particularly with respect to customs and FIRS, to ensure that more money comes in this time. Again, on the part of non-oil revenue, because that is what is critical. Government independent revenue is very important if the budget targets must be met.
Okay, well, what's your take on like sectors like money allocated to sectors like aviation, to rail, power, housing, health, and others?
Yes, I think the in terms of priority setting, I think the budget 2021 budget got it right, and I talked about 4.6 trillion for capital projects. If you look at recurrence is about 5.6, and out of that recurrence, the major sectors for recurrence, you have the bulk of it, of course, is going to defense. Why is it going to defense? We understand the challenges we have in this country. The men that are out there, will need to be taken care of. Okay. Then you have education, you have health, you have interior. These are the bulk. You have police service. Remember, after the NSAS protest, the president promised to increase the salaries of police officers. So that must have been accounted, provided for in the budget. So these are the ones taking care of, taking the bulk of recurrent. If you come to capital, look at works and housing, okay. For example. Then you have, as I mentioned earlier, education, health, and transport and agriculture. Now, if you look at selected interventions, in the rail project, the Lagos Kano is also there. Government is expected to provide counterpart funding for that. You have aviation, you have housing. The 20 billion social housing fund is there. Government is also maintaining the social intervention program. 400 billion has been allocated for social intervention program in 2021. So you have others like that. For trade and investment, the industrial zones, for example, government has voted 10 billion naira, for reviving of industrial zones. So you have a number of them like that. Okay, the airports, aviation, the second runway, for the Nnamdi Azikiwe International Airport is also there. But what is important is, as I mentioned earlier on, is ensuring that there is adequate monitoring and adequate evaluation to be sure that these projects actually get done. Because it's not just about releasing funds. In 2020, for example, if you look at the budget implementation report of the budget office for the first half year, it says that over 400 billion was released for capital, but what was utilized was 242 billion. So from my experience, I was Commissioner of Finance in my state. From my experience, release is different from utilization. Okay, so you can release funds, but those funds will not be utilized. So it's important that in monitoring and in evaluating projects, we ensure that what is released is also utilized, to be sure that, yes, the capital component which drives development, is being implemented. Okay,
I think there's the much we can take. Thank you, Professor Uche Nwalike, for your time.
My pleasure. Thanks.
And now moving on, the World Bank plans to invest over $5 billion over the next 5 years to help restore degraded landscapes, improve agriculture productivity, and promote livelihoods across 11 African countries on a swath of land stretching from Senegal to Djibouti. World Bank Group President David Malpass announced the investment at the One Planet Summit, a high-level meeting co-hosted with France and the United Nations that is focused on addressing climate change and biodiversity loss. Malpass said the investment will help improve livelihoods as countries recover from COVID-19 while also dealing with the impact of both biodiversity loss and climate change on their people and economies. The more than $5 billion in financing will support agriculture, biodiversity, community development, food security, landscape restoration, job creation, resilient infrastructure, rural mobility, and access to renewable energy across 11 countries of the Sahel, Lake Chad, and Horn of Africa. The Manufacturers Association of Nigeria, MAN, Kano chapter has called for the proper positioning of the Standards Organization of Nigeria, SON, the nation's entry points in preparation for the implementation of the African Continental Free Trade Agreement, AFCFTA. National Vice President of MAN Northwest Zone Ali Madugu emphasized the need for SON's quality verification of all imported products, including those from West African countries, even with the rule of origin in the ECOWAS trade liberalization scheme. According to him, the commencement of the AFCFTA further underscores the need for SON's presence at the entry points to prevent Nigeria from being turned into a dumping ground for substandard, fake and counterfeit products from other African countries. He acknowledged the need for product authentication as an additional tool to fight faking, adulteration and unfair competition with substandard products in the market, and urged SON to look at the best way to implement it without putting genuine manufacturers at disadvantage in terms of cost and the procedure for compliance. Trading on the floor of the Nigerian Stock Exchange started the day on a positive note. At the end of the day's session, the all-share index climbed by 0.11% to settle at 40,341.05 points. Equity capitalization also rose to 21.093 trillion naira. 468 million shares, valued at 6.963 billion naira, were traded in 5,697 deals. Zenith, Lasaco and UBA drove column of transactions for the day. Stocks in Asia Pacific were mixed on Wednesday as investors watch for developments on the coronavirus front. Bosede Abel reports.
European markets are keeping track of coronavirus developments in the region, with governments looking to accelerate or keep a good momentum in their coronavirus vaccination drives. In the meantime, lockdowns have been extended in Germany and the Netherlands. Stocks were mixed in early Wednesday trading as investors monitor vaccine rollout and coronavirus containment measures. Stocks in Asia Pacific were mixed on Wednesday as investors watch for developments on the coronavirus front. Nikkei advanced 1.04% to close at 28,456.59. Shanghai Composite down 0.27% to 3,598.65, while the Hang Seng Index was little change as of its final hour of trading. U.S. stock index futures were mildly higher in early trading on Wednesday after a session that saw stocks alternate between gains and losses. Futures contrast tied to the Dow Jones Industrial Average advanced 11 points. S&P 500 futures and Nasdaq 100 futures also both traded in marginally positive territory. As other continents await the rollout of COVID-19 vaccine, investors in Africa are optimistic on the latest developments. South Africa's JSE Africa Top 40 and Ghana's GSA Composite posted gains in early trading, while Namibia's overall index, Nairobi's all-share and Tunisia's Tunidex were negative. Bosede Able, Business Express.
Oil prices gained midweek with experts forecasting sustained rally as producers curb supplies. Now, the dollar losses on Wednesday as retreat in U.S. yields sapped momentum from its recent rebound, and investors cautiously resumed bets that it can resume sliding. With that, we have come to the end of this edition of Business Express. Be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now, and the hashtag is BizExp. Business Express returns Thursday at 9:30. I am Musa Abubakar saying please stay safe.